basically, but the markets, time when we are usually more relaxed, but conditions in the markets are still very favorable, and volatility is still very high and showing some signs of further increasing. That gives us great opportunities to continue trading. So we may postpone our holiday things and jump into the fresh opportunities in the market. You know that the situation globally is worsening from day to day. We have quite bad economic conditions around the world, especially in the Western hemisphere, with the extremely high inflation and all the consequences that follow this phenomenon. So there is a quite difficult situation with, of course, threats of worsening further as central banks, as we all know, started to raise interest rates, and slowing down economies and the higher interest rates are usually leading to bad scenario, which is a recession, though everyone is talking about this now. So when we have such conditions, we have quite good opportunities to make money, and in order to make money, we are going to talk about important chapter in all this process, trading psychology. This is something that is, according to me, not less important than your knowledge about market, your knowledge about technical and fundamental analysis, your knowledge, your experience. This is something that complements your education and your knowledge in the trading of in markets, and it's very important because psychological aspect is one of the key things and pillars of successful trading. So during the presentation, I'm going to show you how it basically looks. So we'll start with the key things that are defining this. It is basically it's our mental behavior, and it's our emotion that is driving us during a period. We're talking now about a period of trading. We have emotions all the time, but in a way to be successful in trading, we have to have certain way of mental behavior or mindset, and we have to control it, and we have to bring it or fine tune it to the best possible level in order to be stable and to be able to make money, because our aim is to make money, not to lose money. And during the presentation, you will see that people who have ignored the psychological aspect usually get trapped into this and lose their money. And I have witnessed a number of traders who lost a lot of money just because missing something very important and not being ready emotionally and psychologically for an action in the market. Psychology of trading, there are few things that are very important. So when we feel like doing something and we feel ready for doing something, then we should basically do the job. If there is something that obstructs our mental situation at that moment, if we cannot concentrate and or focus on something, I think it's better, and this is my strong advice, not to do trading that day, because if we are not fully ready, meaning having a good knowledge and experience and being psychologically ready, then very unlikely that we will succeed, because there will be something all the time driving our attention from the key things. So starting from the beginning, the traders need to go through certain education before starting trading. You have to know what is the market by definition, let's say, and then go into details. What are the rules? What are the principles of the market? How it functions? How it's ruled? So you have to know all these things, because if you jump into the unknown territory, it is a great danger for you as a trader to get caught somewhere and you are simply not aware of this. So when you know the major principles of the market, it works basically on the principles of supply and demand. Then you have some knowledge, and you know that if the crisis like now prompts traders from risky assets into safe haven. We know that dollar will go up because dollar is seen as a safe haven. If we don't have this basic knowledge, then we are going to be short in certain things, and very likely that it may lead us into the losses, something that we don't want to happen. But you will see during the presentation that losses also happen, but our main aim is to increase the profits and reduce losses. Second important thing is good knowledge in technical and fundamental analysis. Once you learn how the market functions, you need to know what are these things that drive the market, or what are the things that will give you signal what to expect and in which direction the market will move at certain period of time. So if I want to trade, I will check the daily calendar, let's say for fundamentals, to see if there are any releases. I will check also the news to see how is the situation. Nowadays we have a war in Ukraine. So every day there are some news about this. So this is one of the market drivers, the geopolitics. You have to be aware what's going on. You have to be aware about politics, what's going on. What if President of the United States says something, or President of Russia or China says something big? That will definitely move the market. So you have to be aware of this. If you are not aware, you will say, oh, what's going on? Euro is falling like crazy, and I don't know why. Yes, of course you don't know why, because you don't have knowledge about this. You didn't learn how to read these news or economic indicators, and to know how to react in either scenario, whether positive or negative. You will know how to react if you have a knowledge. Technical analysis are also very important. Most of the technical analysts will say that technicals are number one, and just fundamentals are just reflecting what technical analysis already signaled to you. In a way, they are right. But a combination of these two things gives us the best results. So try to combine technicals and fundamentals in order to be successful in trading. Do not start trading before you fulfill these two very important things. So until you educate yourself, you don't need to be an expert in these things, but you have to have a good basic knowledge so you can apply it. You can read the chart, and you can apply the economic indicators, technical indicators, oscillators, trend lines, everything that includes, it's included in technical analysis, and you can get the proper trading signals. So once you have strong signal, of course, you are going to catch this opportunity and jump in the market. If you don't have knowledge, you will see the chart moving up and down. What is going on? Let me try to buy and you lose. Let me try to sell and you lose. Probably you may make money, but without good knowledge, it's the same if you sit in the car without any knowledge, any previous experience, without driving license. It is quite unlikely that you will come from point A to point B without any scratch or accident or something like this. So for anything that you do, you need to have certain knowledge, certain education, and of course experience. Experience you cannot learn. This is something that comes by the time. So more time you are into this business, you are gaining more experience. I'm over 25 years in the business and I'm still learning. And it's good to learn every day something new. You will be always in the situation that you may have not faced before. And you will learn something from this. This is called experience. Experienced traders will react more properly than those unexperienced or less experienced. But this is inevitable, because if you are not, if you are a fresh trader, let's say for 1 year or so, then your experience will be still at a lower level, but you continue to learn every day. And once you gain certain respectable experience, you have faced already several important situations in the market, regardless whether it's due to the economics, politics, or simply just technical signals pushing strong buying or strong selling. You will be much more advanced, and you will have advantage against the other traders, and you will have very increased chances to be more profitable in your trading. This is our main aim. During the trading, you have to have certain strategy. You cannot just jump in and say, okay, I'm going to buy. You have learned the things. You have knowledge in technical and fundamental analysis, but still you have to have the strategy. Strategy means what? you have to know what are you doing, for what reason. You have to focus on one or two instruments, which is easier to control. If you have opened 6-7 positions in 6-7 financial instruments, it is very difficult to follow. You might be profiting on one but losing on the other one, and since you have a number of positions, it is more difficult to follow. So you may just balance two positions, one buying, one profiting, one losing, and come at zero at the end, in the best scenario. But it could be also a loss on both or 3-4 of them. So create the strategy, and strategy is very important. And it's always designed for you. You create it, you design it for yourself. So you are the trader. It's not someone from outside telling you do this or do that. You can learn about various strategies in trading, but you design things according to you. And the most important thing, and this is our subject today, you have to have right mindset. So what does it mean? You have to be ready and willing to trade. Your mind must be clear at that moment, except focus on the market. Because if you are in the very active market, volatile market, fast market, and you start thinking about your car or about what you'll be shopping today or you'll be going out tonight, you will lose the focus. And it's the same thing if you work, and at your work, the company most likely requires full focus at your work to show the results. So you have to be psychologically calm, stable, and focused on the problem. Problem in this case is trading, so you have to resolve it the best possible way. The best possible way is to be most of the time profitable. In case of loss, you have to bring these losses to the minimum, and this is a key of success. Don't expect that you will be profitable every time. This doesn't exist. But if you are losing all the time, it means that something is wrong, and you have to change a lot of things in your approach to trading, in your strategy, in your mindset. So that's how it works. And the picture shows how important is psychology in all these things, because you can make the strategy, you can have a good trading platform, you have enough money, you manage this money, but still you are lacking the key thing. You are lacking yourself, your mind, the way you think, the way you act. The command comes from your brain. Am I going to buy now? Yes, brain will say, yeah, okay, buy. So it has to be fine-tuned to be able to make the right decision. So this is, as I said, quite and very important part of whole picture of trading. So one by one, you need to fulfill all the parts of that picture, of that mosaic, in order to have good and successful trading and the good results at the end. So as I said, right mindset, what does this mean? You need to be focused. You need to be highly concentrated. So when you do the trading, you focus on that action. You take out everything that is irrelevant at that moment, or you close your position and then think about these things that it might be urgent. But do not let your position running in the market while you are not following, or you are not fully focused on this, because something may happen. Of course, you will be always limiting your losses, and you will have stop loss order all the time placed, but still you need to be fully concentrated. Fast thinking is also very important. If you, as we say, catch the birds in the sky, then you are on the right track towards success. So when you see the market is starting moving, there is something, an action, and you have a signal from technicals, you jump in and you think how much it could go up. You place your stop loss order and you let the profit running. Once you see the reasonable profit, you come out. Either you can put the target, I want up to this price or this much points, or you can just simply say, I can take profit here, it's okay for me, and let's wait for the next opportunity. It's important not to think, if you have missed few points or 10 points, let's say, the move was running while you closed position. You didn't make mistake. You simply booked your profit. You turned it into your account. From the floating profit loss, you turned it into something that is under your name. So you took the profit. That's very important. When you think, I took the profit or I lost, This is the final, this is the outcome of your trading. So I made a profit. Regardless, is it $50, $60, $70? You made a profit. So you have to think this way. You have to be positive. And at the end, when you make the statistics and you say 70% of my trades were profitable because I realized how can I work. I educated myself. I have the right knowledge about market, and I have a right mindset. I'm psychologically ready to do it. So I'm functioning perfectly in these conditions. It means that I'm doing well. So you will have always space to change this thing, to adjust, to modify according to your needs, according to the market conditions. But it's very important that you reach certain stage of mindset and you keep it. And of course, making quick decisions. So if there is a action, you have to react immediately. The last thing is actually, for me, is the most important. And whenever I have a presentation with these things included, I always put this discipline. I usually put in the big capital letters with 3 exclamation marks, meaning that's the very important. It's discipline in your trading plans, in your strategy, in everything that you designed for yourself. You are not designing it for me. You do it for yourself. So you are going to be your best friend, of course. You love yourself. You want to be successful. But once you establish the rules, you try them, you test them, and you see that 90% of them are working, 10% you can adjust during the period of trading. When you see something better and say, okay, I'll change this to this, it will be giving me better results, but you need to stick to this. There is no, but if there is a market movement, it might go higher. No, you put the rule, I'm going to take 50 pips and I'm going to take 50 pips, regardless that market will go 60, 70, 100 pips. I made a plan and I have to stick to this. The discipline is one of the key things of successful traders. They don't care what's going on after. They will jump in the market again. There is no problem. It's always more wise to book your profit, to transfer it, I like to say, to register it under your name. So it comes from the trading account, from the floating condition, which means it could anytime increase by 200% or decrease by 200%, to turn it to your account as a one amount. So it is now yours. So these things are pardon, very important in being successful traders. So psychology in most of these things plays one of the key roles, because you may have all conditions fulfilled, but if you are not feeling like doing this at that moment, or you are distracted by something, or you cannot focus, or you cannot concentrate on this, then quite likely that you may not succeed in your tradings, and no one wants to lose money. Not this, unfortunately, nowadays money is something the most important for many people. I hate to say this, but it's true, and it's a fight with yourself. So when you finish your trading and you are successful, you proudly say, I did something good. And you can stand in the mirror and say, this is the winner. But to become a winner, you have to pass a number of steps in basically disciplining yourself. Once you learn everything and you are able to apply and follow, then you made half of your success, because you have plan, you have knowledge, you have experience, you are psychologically ready to do it. And this is the thing. Behavior of the trader, it is important. Many traders see only one direction in the market. I was surprised years ago when I heard there is always uptrend. I said, how come? I mean, it's not US stock. Even US stocks are stock indices, let's say. They are generally trending up, but they are making quite deep corrections. So it's not just a trend up or trend down. You have to see the both sides. You have to see what is the prevailing trend and what will happen in case the market turns opposite way. So where are you going to put your stops, and how are you going to react in certain things, in certain situations during the market move, or unwanted market move that goes against you? So you must understand that yes, you are gaining, but you have to be always aware of the size of losses. This is coming into the money management, risk management, basically. So if you have, let's say, $100, I'm planning to make $50 profit and I'm willing to lose $30. No one single penny below this. My profit may increase in case I catch the good move. I may stay with this. But in the in the right circumstances, when you make your policy, you may say, okay, I made my 50 pips, I'll take out. But this is again individual, depending on us. Are we going to continue? But what I would like to say regarding risk management and putting stop losses, this is very important. Do not play with the market. Market is huge. It's much bigger than you, much bigger than any big player in the market. Those funds, big banks, central banks who have a lot of money, market is bigger even than them. So it can eat you at any time if you don't protect yourself by a number of important things, starting from knowledge, education, experience, and then your rules, your strategies, your plans that you need to stick. You may get into a situation to lose money, yes, but you will limit that loss. So it is very important to have stop loss always. Otherwise, I've seen many traders chasing the price. The market reaches certain profit. He reaches certain profit in his position, and say it could go more, and then starts reversing. And now he's chasing the market. Chasing market means loss, means that you are gambling. You are not trading, you are not speculating, you are gambling. You throwing it, and whatever happens. Is it going to be black or red? Is it going to be 17 or 18? We'll see, God knows. No, this is wrong. You have to make the plan. If the market turns against you, you'll be always safe. You will reduce your losses to the desired level, the one that you decided, and you will not lose more. But you can, of course, always extend your profits. Now we are going to talk about two main things that are killers for traders: greed and fear. You will not believe how many greedy people I've seen during the trading, during my career. And we're talking about millions lost just in their stupidity. Because if you have certain profit, it's wise to take this profit, book it. As I say, register that money under your name. Then you will see what's going on. I had a case with a trader who was under my advices and supervision, and so we made a quite good profit, and I told him close the position. Indicators were already screaming for reversal. It's going to be another few ticks. It's pity, I want to make this round amount 1 million, whatever. So just close the position. You can re-enter again if it continues, but it looks like reversal. Technical indicators are pointing to reversal, and some news important are due to come and likely to be negative. So it's going to be turn to the other side. Then you can, when you get the signal, you can jump in again and double your profit. But greedy traders do not think this way. They don't function this way. They think they know everything, number one. So they will jump into market without, it's like jumping in the sea, and then you realize that you are not swimmer. You don't know how to swim. But let's first jump in the sea. No. Let's first educate ourselves. Let's get proper knowledge and then jump in. Greedy traders will be always gambling. He will be risking up to the last cent. And this could usually ends in losing all his funds. Because once you catch the loss, it's a chain reaction, domino reaction, unfortunately, but that's how it is. Then when they turn into the negative circle of losses, they are just moving around and losing more and more. And they don't want to realize, or they cannot realize, I don't know, they are losing money, and they get slapped at the end when they are fully stopped out. There is no funds in the account, and the broker comes and say, okay, you don't have money. Would you like to add some more money or what? But your position is closed. So this is very important. Greediness is a bad thing, and I don't think that any of us cannot fight this. It is possible, of course. You need to change your mindset, and you simply need to follow the rules and think right way. Few ticks if you are going to lose. It's not end of the world. You have your profit. You have to change the way of thinking and be firmly on the ground. Unrealistic expectations will drive you nowhere. As most of these people say, okay, I open a trading account, now I'm going to be a millionaire in 1-2 weeks. Oh yes, it happens, but not very often. Once in 100 years, it happens that people are lucky. Good sample is this, scratching lottery. Every one of us bought it once at least. You buy it for €1, for example. You scratch it, you get 10 euros. What will greedy trader do? Instantly will go and say, okay, give me 10 lotteries. And he'll be scratching, thinking now it's going to be 100, now it's going to be 1,000, 5,000, 10,000. How much is the limit? At the end, he has nothing. So his loss is 11 euros. He bought the first lottery, he won the 10 euros, and he lost 11 euros. Trader with the right way of thinking, who is not greedy, will say, okay, I was lucky. Let's try our luck again, but with a limited amount. May put 2 or 3 euros into reinvestment and put the 7 euros on the side. So if he loses, he will lose 4, but he will gain 7 euros. So it's the money management, risk management, and the way of thinking. So that's why the greediness is very dangerous, because people many times in their greed, they lose the connection with the reality. They simply react wrongly. And this is the proper picture of how they work. Take a look at this chart. Usually the market starts moving and they are getting, wow, now it's my chance. And they wait until the market peaks and then start pointing down. In the normal circumstances, you will need to wait for the signal. If the market has peaked here and starting going down, or it's just going sideways, wait to see what's going on. It might continue higher, but it might reverse down. So no, they jump and buy. It's excellent time for buying. They are not consulting technical picture. They don't see the indicators, what they are pointing. They don't know what is going on in the economies, or there are some indicators or whatever. They don't care about this. They just think, I'm going to make money. And they buy here. Usually they say greedy people buy at the highest price and always sell at the lowest price, and which is wrong. The main policy of trading is as better as possible price for buying, as higher as as lower as possible for buying, and as higher as possible for selling. Greedy people do exactly opposite. And if you see this picture, it says everything. So this is how they react. They buy here, they get stuck, they lose money. Then they, instead of thinking that market is moving in circles, so miss one circle and catch the next one, mix one wave and catch the next one, they jump and make the worst possible decision in the worst possible situation at time, and they make mistake and they lose money. And the worst thing that they are not fully aware of this. They say, oh, market was going against me, this is wrong. No, market was going where it's going. You were going against yourself. You are the biggest enemy for your money. It's not the market. Market is moving as it's moving. It's up to you when you jump in to know how to read the market, how to understand the market, and how to make the right decision without negative feelings. Greed is negative feeling. Fear is negative feeling also. So you need to get rid of this as much as possible. Fear is something that is quite natural, but greed could be healed. Just a good sample, crude oil from last week. Let's just take this last move. There was a correction of the larger uptrend. This move, I think, when the President Joe Biden came and said the prices of petrol in the United States are at record highs, so we need to do something urgently to reduce the prices. Of course, the market reacted instantly. The crude oil was around $6-7 down for that day in total, and many traders jumped in and sold. And it's a good opportunity. Although there was an downtrend for past 1-2 weeks, I would say, and many people who know how to react in the market, when they got the signal, like let's say somewhere here, they sold. They were catching those who saw the sudden move, although there was a day before also, they jumped in. Okay, you got some profit. You are still holding your position. You have first warning. Look at this red candle. It's heavy, it's red. It's still pointing to the downside, but we have initial warning, this long tail, meaning that the price was strongly rejected at the downside. They ignored this signal. The next day, there was a doji candle. Doji means indecision. So market doesn't know where to go. In case you don't know what to do, you just clear your position. You don't have position and wait for the next signal. Simple. There is no philosophy about this. If the market goes lower again, if it continues this downtrend, which is quite likely, you can always jump in and sell. You don't need to catch every pip. Miss 10, 15 pips is not a big deal. If the market is going to reverse, then you will get a signal from technicals and you will jump in and buy position. But when you have indecision, you don't stay there. And I've seen many people stay there expecting it's going to go down. Wait until you see. If you have a signal, if you are not sure about something, you just take a step back, take your profit, whatever it was, no position at that moment, and wait for the next signal. In all my analysis that I write, if there is any uncertainty, anything that is not 100% clear, I would say, okay, you have opportunities for this and that, but it's uncertain for now. It's unclear. So sit and wait for a stronger or clearer signal. And many people made mistake here. Okay, the loss was not something dramatic, but if you have small account of few $100, it was quite considerable. But more important is that you produced a loss. Let's take out the money. A psychological moment. You lost the money. So this is something that we try to avoid. Losing money must be minimized. You cannot avoid it completely, but you have to minimize it. This is the whole philosophy. Minimize the losses, increase the profits. If you ignore the signals, probably you were ignorant, or possibly you just don't have knowledge. You don't know that this means something, this means something, this means something. This is bullish engulfing, so it's a positive signal, so you should have bought here, instead of keeping a short position in the situation like this. So these are the things that traders learn during their trading. They gain experience during their trading, and it is always helping them to perform better in the market. Now we have our greedy guy. He's always taking position and squeezing up to the last point, just not to miss anything, because this is very good, it's a move. It's greedy guy will always have excuses, or he will just say, I know what I'm doing, don't worry. And I like to ask them when the position reverses and they miss the opportunity to book that profit, to close the position, to transfer this money under their name. And I ask them, what do you know? What is your expertise in this case? You had a profit and you have blown half of this profit because of reversal. Many of them, as we saw in the diagram before, they do not realize that they are at great danger. They already raised half of the profit. They will sit and wait until the profit is completely wiped out, thinking that it's okay, market will reverse now. You don't think this way. You say, I have a profit, I'm going to take it. This is many traders have this as their job, as a main income. So what do you think when you need to earn certain amount every month to live from this? This is your main income. You can earn millions. Clever people, and of course, you need to have a big account for these things. I mean, a reasonable amount that will help you. But if you behave badly to your own assets, to your own money, then you cannot expect success. If you are the biggest enemy to yourself, then you have to think what's going on with me. Let's change something. And the greedy traders are usually losing the money until the last penny, when the usually company broker who is providing the services to them comes at the end and shuts the closes position and send a message that your account is out of funds completely. So the greedy guy, from having certain profit, whatever it is, it's reasonable, it's profit, turns the situation into completely negative mode and loses all the money and wipes out the account. As we said, how it is with I think I mentioned already most of these things, but let's go quickly. Greedy guys always, I know everything. They know everything by default, regardless that they have no clue about this, and they will jump into market. It's like you jump into Amazon River full of piranha fishes. I'm okay, no problem for me. Yes, no problem for you. They will eat you within 30 seconds. So this is how the greedy guy jumps into the market without knowing what's going on, how it functions, without asking any question, without just, let's go, I know what I'm doing. And they're always risking much more than they can have. They have bad risk management. Risk management says you have to make it 1 to 3, usually 1 to 2 or 1 to 3. So 1 is loss, 3 times is a bigger profit. That's the strategy. But if you have 1 to 1, so either I'm going to make $100 or I'm going to lose $100, it's something wrong. And usually they don't realize that the market is going against them, and hoping it will reverse. It's now it's going to be opportunity. And when they get discouraged completely, let's say market is going down against them, then they will come and buy at that point, thinking that this go. So they're going to make their position even worse, and they are not aware until the message from broker slaps them directly in the face when the broker says your account is out of funds. So please either refund it or close it, whatever. I mean, you cannot trade anymore. Why this happens is just because of wrong mindset, a wrong way of thinking, inability to realize how the market really functions, lack of experience, lack of knowledge. On the other side, we have fear. Many traders are scared. I was feeling quite big fear in some early stage of my career, though I was younger, and usually younger people feel less fear. They are more brave in these things, especially if you trade for the company's account and you take a shot of 10, 20 million. It's not easy job, but if you have a fear, then very likely that you will put yourself into troubles. So you have to be, I cannot say fearless, there is no such person, but you have to reduce the amount of fear, because fear distracts you as a trader. It distracts you, it narrows your view and your focus, and you cannot, actually narrows your view and distracts your focus, so you cannot see what's really going on. And usually the people who fear a lot, they will unfortunately make a wrong decision and jump into the wrong direction, opposite direction, and they will not be successful. So fear is something that can be controlled. It's a matter of training. It's very dangerous. If you feel fear, I think you should first think of handling this phenomenon, trying to do some exercises, perhaps to ask someone how to escape from this situation, how to pass through, because it's quite dangerous to enter the trade if you are fearing of anything. If you are fearing, I'm going to lose $10, I'm going to lose. If you are negative from the very beginning, then it's quite unlikely that you will be successful, because fear distracts you at a great grade, and makes you usually losing money. And it's pity. I mean, it's always better to find the proper way to skip this, as you need to control your greediness, because these are all your enemies. They are not helping you. Fear is something that is natural feeling, and we all have it. Greediness is not characteristic of to say that everyone is greedy. No, we might be slightly greedy here and there, but generally there are plenty of traders that are perfectly aware of their situation, and they are not greedy at all. And fear is something, yes, that happens, but it is controllable, and it will be very good if you work on this, so you can avoid any unwanted situation. And this is the answer. How you need to create the rules. So if I say I'm not going to be greedy, I'm going to take 20 pips of profit, regardless that the market will be going another 100 pips. I'm going to take this, close this position, and if I see the market is continuing, I'm going to re-enter market again. I will buy again. But I have my rule, and I follow my rule, because it's always better to book this money, to take it, transfer it under your name, and then see if there is opportunity, you can buy again, or if the market reverses, you can sell regardless. It's important that you have rules and you follow them. So you will not let these negative things drive you, because sometimes these people get euphoric and they cannot control themselves. They think, yes, if they see the market is moving in their direction and they're profiting something, they just lose their mind. Okay, feeling of having a lot of money is great, but do you have this money? No, it's still floating. So do something, close the position, take your profit, put it in your account, and then you will feel great of having a lot of money. But if you just feel on floating profit loss position, and you know that nothing significant will happen, you will not succeed. And also always to control your control your losses, to have a very good risk management. This is very important. Do not make a trade without putting immediately stop loss. You can put the floating stop, which trailing stop, which follows your price action. Let's say if the market is going up and you buy euro dollar, and you say I want to lose only 20 pips, you'll put the price of your stop loss at 20 pips below the entry price. If the price of euro dollar continues to go higher, your stop loss will be following, but always with 20 pips distance. Once the market stops and turns opposite, the stop will stay at the last highest level. So you can control your loss all the time. This is very important. As I said, I'm going to repeat, the main aim or the main philosophy in trading is increase your profits, reduce your losses. This is how successful traders function. If they cannot do it today, they will not do it. If they don't feel like, they will not do it. They'll simply go out, bicycle, going drink beer, or running, whatever. Just, I don't feel. Let me go out and clear my mind, and most likely tomorrow I'll feel bad. And take all these negative, I would say negative emotions, as greediness and fears are negative emotions. They distract us. They do not let us making a right decision or following our aims. It will be always distracting us because it's something that dominates in our mind, controls our mind. Even if you have thoughts that you are doing wrong, the greediness will tell you, no, no, don't worry, you are an expert, you will make millions. Once when you lose the money, then you will realize that it's wrong. And the fear, of course, fear narrows your view, simply paralyzes you, and then you cannot make right decision. So it's always better if you feel like not ready, if you feel like you cannot make it today, don't do it today. It's not end of the world. It's better to skip 1 or 2 days if you don't have right things in your mind, if you don't feel emotionally stable due to various reasons. If you're just not fit and ready to trade, better not to skip it rather than to drive yourself into the losses. So this is very important. And I would like to ask you if you have any questions. Uh, I'll be very happy to answer to you. No questions. It seems that either I was right into the point and I said everything. There is one where I can follow you. You can follow me on FX Street portal or on the portal of my company, windsorbrokers.com. You can find all my comments, analysis, articles, and things. And you can always, you can also contact me if you, I don't know, need any help, any advice, any suggestion. I can assist you at any time. Okay, we have the thing about our subject, emotions. You have to think of this as what I said during the presentation. You have to, it's sort of like a meditation. Before you start, you sit for a couple of minutes, take a few deep breaths, clear your mind, and then focus yourself. Of course, you have to have a proper knowledge about markets, about things. And if you think that you are Superman, just close your position and go for a walk or something, because this is something that may drive you into troubles. You might be Superman. I don't say no, but usually in trading, it is quite dangerous. So try to skip all these negative things that are giving you false courage or fear. Both are they're opposite, but they're both negative. So try to be calm. Try to be cool when you are at work. In the work that you do, you must behave a certain way to have good results. It's the same thing here. So nothing changes. If you have fear, try to get rid of it. What is my fear? Face the fear. If you have fear, you have to face it to see what is that dragon that fears you. Then you will see that it's not dragon, it's a small little lizard that looks like toy. And then you will ask yourself, why what I was scared of this little creature that is funny. And this is usually fear. When we have fears, we can see it, we usually see it much bigger than it is. And this is what distracts us. If you face the fear, then you will see that it's not realistic. If I'm going to lose money, okay, it's a fear. I'm short, let's say I don't have enough funds. So if I lose, I'm going to put myself into a more difficult situation. Yes, okay. So that's why I'm going to apply right risk management policy, and I'm going to minimize that loss. Okay, I'll be hurt by losing money, but I'm going to minimize that loss. But I will do my best on the opposite side, which is profit, to raise this to the highest possible. And this is a road to success. You have to talk to yourself. You have to control yourself. You have to make the right decision in addition to all this knowledge, experience, and things that you need to know. Every time you feel that you are not fully controlling your emotions, that there is something, little devil telling you, jump in the market now, it's going to be 1 million profit, I would say take a break and come after 15 minutes or after half an hour or next day simply. I do the same. If I don't feel like, I don't feel like. That's it. It's a rule. If you don't feel like, I'm going on my bicycle, I'm going to ride for 10 kilometers, clear my mind, make my body tired. So it will help me to stabilize emotionally. And I will take these two little devils, fear and greed, out of my mind. Okay. If we don't have more questions, I think our time is already at the end. I would like to thank you all for attending today's webinar. As I can see, there are plenty of people, so I'm glad that we had the right subject, and I hope that I managed to pass you some important advices in your trading. And hope to see you in next week. We'll see what will be the next subject, but it will be, I'll try again to find something very interesting for all of you traders. Thank you very much. Have a good day and talk to you soon.